Hello again. In this video, I'd like to talk to you a little bit about what I see coming at the moment and where markets are. You've seen a big rally in the last few days. A lot of people are saying, let's buy. This is great. The market went down 20%. Let's get in. And I want to say to you that I suspect that this is a very short-sighted view on the part of investors, whether it's institutions or individuals, that's not really taking into account the impact of this disease process that's working its way through the world. I think it's very important for us to balance our portfolios and make sure that our assumptions have self-correcting features in the way asset management is taking place. Now, what do I mean by self-correcting features? If you are running a portfolio that is designed to make optimum profit, you have to consider the possibility and probably the likelihood that part of your assumptions, or at least some of the choices you make in your investment portfolio, are going to be wrong. There are going to be examples of stocks that you thought were going to rise and then they didn't, or that they were outpaced by others, or that their sector of the economy was weak and didn't really rebound as the markets rose and so forth. And so you will find yourself in a position of having to tolerate the unfortunate consequences of errors. A properly balanced portfolio has a dimension of defense and offense. And what I mean by that is that when you have a defensive position, that's a position that when markets are falling, that position is rising. And when markets are rising, that position remains relatively stable. Okay? That's very, very important. Okay? An offensive position is a position which would take advantage of certain unique trends that are taking place in the market. For instance, the need right now for people to remain at home brings a raft of different alternatives that may be appropriate investments, given the fact that money is being spent in different ways and people's time is being spent in different ways. And therefore, the investments that make sense in that environment are different from the investments that make sense when people are all at their offices and working and so forth. So there are some very unique opportunities that come on the offensive side. But it's important for us to look at the reality of where we're going right now, because in this time, with the market rallying very significantly the last few days, it makes sense to me to say, wait a minute, hold on there, Hoss, that doesn't make sense, because we really haven't gotten through this crisis at all. We are still at the very beginning of what looks like a months-long process of mitigation and attempts to control the rate of infection. The fact that one city has dropped its rate of infection, or one country has dropped its rate of infection, really doesn't speak to the world crisis in a comprehensive manner. So that leaves us with a profound question: is this a good time to invest? And my answer is, it's only a good time to invest if you can create a balanced portfolio that has an appropriate level of defense against losses. And our approach generally takes a limit of 8% loss on a position so that we don't wind up getting wiped out on something. If we have a position that has not succeeded and we find that that position is not recovering when markets give a good return, then that position will be eliminated from the portfolio. We just simply do not believe in riding it out. Another detail that I think is really important is the notion of people taking an on or off approach to investing. I like to call that a binary approach. A binary approach is when you're saying, I'm in or I'm out. I'm in the market, I'm out of the market, which is essentially a form of market timing, which is extremely difficult, and even computer systems fail to succeed at market timing. So the idea of being a market, you have to think of it in terms of its many, many components. So we look at around 60,000 different investments, and we narrow down to about 200 that we think are worth watching consistently. And it is possible for us to see that every possible permutation of opportunity exists within that range. In other words, there's no such thing as the market. It's actually the individual players that matter. You know, some of the players are having the flu, some of the players are well, some of the players are very, very good. Some of the players are weak and need more time to establish strength. And that's what I'm talking about when I say building a portfolio that has the appropriate components to be able to handle the situation. So I just wanted to, once again, I just want to conclude by saying that it's very important for you to manage your capital in a conscious manner that involves a deft hand that will allow you to have a portfolio that can handle rising markets with some benefit and falling markets with a defensive strategy that will protect your capital. Okay? So give me your comments and let me know how you feel. Thank you very much for watching.